We now move on to look at how to record the transactions and how to then look at summarizing them in some form. Our objectives in this session would be to look at what are known as the source document and their role. We'll also see that how from these source documents we need to record transactions into what are called as books of primary entry. We'll look at that also. And within the books of primary entry, we'll focus on the sales and purchase day books, the cash book and the petty cash book. So let's look at one by one, but before that let me just recall what we have covered till now, which is basically to say that we have learned till now that businesses actually provide products and services which then they sell with a view to make profit for their owners. Now the role of the accounting system basically is to record the monetary effects of these transactions and then summarize them and create information about them. So what we are going to look in this session is essentially focused on as to how, as and when these transactions just do happen, how they are recorded, what are the various types of documents on which they are recorded. The starting point for that is what are known as the source documents. Now let's take a look at what are these source documents. These are essentially documents that you need to input or complete as and when a sale, for example, happens, a purchase happens, money is borrowed or money is lent or interest is paid. We need to put these transactions into certain document which are known as the source document. The different important source documents are what is called as quotation, the first one. Essentially, when as a business I am going to buy some product or raw material for my company, what I do, I normally don't buy just from one supplier. I go about asking the price with 3-4 suppliers. So what normally business do is to ask for what are known as offers at which they are willing to supply and the terms and conditions at which they are willing to supply, the price and the other terms and conditions. Now this, when a supplier provides to a potential customer, is known as a quotation or a pro forma invoice, where he details the description of the goods, the unit price of that particular product, then the total amount, any taxes, any discounts, etc., and says that he is willing, it is just an offer saying that he is willing to give the goods at that price. Usually business will have such 3-4 quotations, compare, have discussions with the supplier and then finalize the purchase order. So once the quotation has been accepted, then a purchase order is released from the company or the business that is going to buy the goods. Now this is again details that gives the detail of to whom this order has been placed on, what are the price, what are the description of the goods, what are the other terms and conditions in terms of when it should be supplied, by what time it should be supplied. If it has to be supplied in installments, then what are the installment dates on which the consignment should be received, and so on and so forth. Purchase order and sales order are related. While the purchase order is released by the customer, the sales order is an internal document of the supplier. What he does once receiving the purchase order, he internally creates a document based on the purchase order and authorizes the sale to happen. That means internally the sale is approved, a sales order is made, therefore then the sales order, based on the sales order, an invoice or a bill is generated. Invoice or a bill is essentially demand for payment from the customer, saying that we are in the process or we have supplied to you so and so goods, you need to make a payment. We will look at invoice a little more detail later in this session. Once an invoice has been raised, this is the goods dispatch, the warehouse is informed about it and the goods are dispatched by the warehouse to the particular customer. Now that is also accompanied, when the goods are sent, the goods dispatch note is also sent along with it, so that the customer knows based on what order of theirs and what details of the goods that have been sent, is provided in the good dispatch note. Also, the good dispatch note is sent to the accounts department, a copy of which is sent to the accounts department, so that in case the payment have to be made, they can also follow up on that. Goods received note is something that has to be done by the customer. Once the goods have been received at the warehouse of the customer, the warehouse people, the warehouse personnel make out a note saying that these are the goods that have been received from so and so supplier, and the details of the goods, under which purchase order or sales order, under what invoice, etc., and then copies of that are circulated internally. A statement is essentially what a supplier sends to a customer, saying the various orders that have been fulfilled by the supplier on, and the status of payment on each of the orders. It is like a bank account statement that you normally receive. A statement is sent from the supplier to the customer saying these are the various purchases that have been made, payments on which have been made, and where they are due and pending. A credit note is kind of a negative invoice. We will look at credit note a little more detail. Basically, it means whenever there is a situation, in fact, credit and debit note are situations where refund is required by a customer, or a supplier has to refund a certain amount. They issue credit and debit notes, which you will see little more detail as we go down with this discussion. A remittance advice is when a supplier receives payment, he also receives a covering note or an advice which states that the payment has been sent by the customer on account of which order, which invoice, etc., so that the supplier will be able to match the invoice and the order accordingly. Receipts are issued by the supplier saying that we have received the money and therefore the receipt is issued. These are some of the documents, some of the important source documents based on which the transactions are then recorded onto what are known as books of prime entry. Now, before I go into the books of prime entry, let me just take you through some of the important documents which we believe you should have an idea about. For example, invoice. Essentially, invoice is related to a purchase order and a sales order being generated. A purchase order coming from the customer and the sales order being internally generated to ensure that the sale is authorized. Once that has been done and the invoice is generated, essentially as a demand for payment from the customer, and an invoice is sent and the goods are dispatched, the invoice is basically asking for payment from the customer. But the invoice also has more role than just being a demand from the customer, and that therefore multiple copies of the invoice are also generated. Either they are photocopied or carbon copied, or even the stationery itself is made in such a way that there is what is known as multi-part invoices. Invoices need to be numbered sequentially. 2 points of view. One, many countries legally it is required, including in India, that wherever your invoice stationery is there, there is a sequential number given to it. Even from internally, from a purpose of tracking for the company or the business, it makes sense to have a invoice number. The kind of details that are captured in invoice is, name and address of the seller and the purchaser, the date of sale, description of the goods along with the packaging and in what lots they will be sent, etc., quantity and unit price, then details of discount in case any discounts have been negotiated, the gross price, then the discount, and the net price would be mentioned. Usually a tax called value added tax or sales tax is charged by the particular state governments, which also needs to be then added to it. And in case a service is being provided, then instead of this, a service tax is used or charged. If sale is on credit, then the terms of the credit, is a 30-day or a 60 days. So when is the payment due is also mentioned on the invoice. In case the payment is not immediately due, but the supplier has given the customer time to pay. Normally terms could be 30 days payment or 60 days payment or 45 days payment. Also some legally required details, like when you are supplying and you are in the business of trade, you need to register yourself with the sales tax authorities, with the excise authorities and the customs authorities in case of import and export. So in such a situation, the sales tax registration or the VAT registration number, the excise department registration number, etc., need also to be mentioned in the invoice. As far as the multi-part invoices, there, as we said before, invoice, apart from being just a demand from payment from the customer, is also used for internal purposes. While say if there are 4 copies of the invoice, the top copy may go to the top original may go to the customer demanding payment or requesting payment. The other can be sent to the accounts department, so they can track the payment. The third copy can go to the warehouse from where the goods have to be dispatched, and the goods dispatch note can be generated, and the fourth copy can be kept within the sales department along with the sales and the purchase order to ensure that the payment is also tracked. So these are the uses. There could be more multi parts. We had talked about a 4-part invoice. There could be more parts depending upon the nature of the industry. The design of the invoice is also nothing which is prescribed by any legal requirement except for some of the contents, but otherwise based on the industry practice, certain other legal compulsory requirements, they may be designed. For example, the invoice of a consumer goods seller like soaps and toothpaste will be different from that of an invoice of a hotel which charges you a room rent and for the room service of food and beverages that you've had. So the invoice could depend upon the design of the invoice could depend upon the nature of the industry in which you are involved in.